before you enter your trade, there are three basic things you need to check. First is the market structure. That's number one. You need to know the structure of the market you are about to trade. Okay, so if you fail to understand the structure of the market, no matter the strategy you are using, it's definitely going to fail you. Okay, so that's number one thing you are going to be looking at each time you open your chart. Okay, the second thing is knowing the nature of the trend. You know the nature of the trend, understanding how the trend is moving, okay, which I'm going to also teach you how to identify nature of trend and know the best nature to trade. Okay, then I'll also reveal to you the third thing. This is after when you have checked the structure, you check the nature of the trend, then you have to also start now putting in your maybe your support, resistance, trend lines, or any other stuffs, combining different factors to take a particular trade, which is known as a quality trade. Okay, so for you to take a quality trade, you first of all have to start with this thing I'm going to share with you now. So the first thing is that we are going to be looking at the market structure. Okay,
Storybox off.
so market structure, that's the first the topic of this section, what we'll be covering here. So basically we have three types of market structure. Okay, we have three types. The first market structure we are going to be looking at is we have the trading markets. So trading markets, I believe you have heard about it and you know it, but I'm going to expose to you some certain things you don't really know about a trading market. Then the second market, okay, let me just put this so that you won't be confused about the numbering. So number one is the trending market. Okay, so the second one we are going to be looking at, okay, is the second one. Number two is the ranging market. Okay, that is number two, ranging markets. So number three market structure we are going to be looking at is uh, choppy market. Okay, choppy market. So these are basic three basic market structure you should know before trading. So now before you start trading, you have to check the market structure. You have to check if the trade or the market is trending. Okay, you need to know if the price is trending, okay, or if the price is ranging, or if the price is choppy. Okay, so don't worry, I'm going to share with you all these things. You are going to understand when the market is trending, when the market is ranging, and when the market is choppy, and you understand the kind of trade you should focus on. Okay, so you shouldn't be trading all these market structures. Okay, you need to focus on one of them, or if you can trade two, then good, but there are one of them that you can't even trade, and I'm going to expose to you the reason why you can't trade that particular market structure. Okay, and that might be the mistake you have been making. So this is it. We are starting with this market structure, and when we're able to identify this, we are jumping into the nature of the trend, which is the second thing you have to check each time you are about to take a trade or you are preparing to take a trade. Okay, so we have the trending market, which is number one, right? So when you hear that a market is trending, it means that the market is going in a definite direction for a long period of time. Okay, it's either going to the upside, like what you are seeing here. You can see that this price is clearly going to the upside. Okay, or is going to the downside. Okay, so a trending market is simply a market that have a defined direction to the upside or downside. Okay, this is just the basic definition. So when you look at this price action, you already know that this market is trending, and the direction of this the price is trending up. So now this one is also trending. Okay, the price have direction. Okay, it's going to the upward direction or downward direction. That is about trending market. Okay, so I'm going to expose more about this trending market, okay, to you guys. So if you look here, we have a downtrend. Okay, number one example, we have a downtrend right here. So here you understand how behavior of trend. Okay, for the fact it's an uptrend, there is certain behavior, or downtrend, there is certain behavior you need to see, okay, for you to tag a price action a trending market. Okay, for you to say that this price is trending, there must be a pattern of movement, okay, or certain behavior that the price display as it goes up or down. Okay, now if you look here, I have this, my SH is going to represent swing highs, okay, then my SL is swing lows. Okay, so some people call these things here, some people say pivot high, pivot low, or popularly known as higher highs, higher lows. Okay, so but I'm going to be using swing highs because I'm looking at the swing point. So what do I mean? You can see the price movement as the price move to the downside. The price don't just go vertically to the downside. Okay, the price move within this in a kind of systematic order, the zigzag movement, okay, to the downside. Okay, to the downside. If you look at this point, this is the highest swing, okay, the swing high, okay, that's SH representing swing high there. So you see the swing high, the price bounce back, okay, make the swing low, retrace back, make swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low. So that's what the price keep doing. Okay, as long as this price we keep trending down, this price will keep making this movement. That's the behavior, that's the pattern. This price will be moving till the downtrend ends. Okay, till you discover a change of trend, which we are going to learn how to know when the price is about to change from a downtrend to uptrend, or from an uptrend to a downtrend. Okay, so you can see the movement, okay, of price action when the price is trending down. You have already seen the behavior of the price when it's trending down. So you don't expect the price, for the fact we say that the price trending down is when the price the direction of the price is downward. Okay, for the fact we say is downward doesn't mean that the price will just from up straight down vertically. No, you have to see this kind of zigzag movement, okay, for you to have your swings. And these swings will also help you take position, okay, know where to enter and where to exit, where to set your take profit. All these things we are going to learn them how to leverage on this kind of trending market. Okay, so the second this image I have here is the uptrend. Okay, it's an uptrend. You can see that the price is clearly trending up. Okay, you have this swing high, swing low, swing high, swing low. So the same movement as the price is going up, the same movement when it's going down also. So this is the movement of the price. So you need to know, okay, the price movement. You need to know the behavior, the pattern in which the price moves. Okay, so this is for trending market, guys. So the second market structure which we have mentioned, okay, I want to share with you the example, okay, and the psychology behind this movement. Okay, so this is an uptrend. Okay, the uptrend means that the buyers are pushing this. There are more buyers in this market. Okay, there are more buyers, and once you see more buyers in a trade, or maybe crash, boom, volatility, any of them, you will see that the price will keep going up. Okay, they keep pushing the price up. Okay, when you see a downtrend this way, just know that we have more sellers. Okay, more sellers here pushing the price down. All right, so the next market structure we are going to be looking at is a ranging market. Okay, when the price is ranging, simply the price ranges when it goes from left to right. Okay, when the price is going sideways, okay, the price is not actually going up or down, the price is going from left to right. As you can see, the price keep moving to the right hand side. Okay, ranging or moving between a bounce, the upper bounce, which is this one, and the lower bounce. Okay, and the upper bounce is popularly known as resistance, while the lower bounce is known as the support. The support is called the demand zone, while the resistance is also called the supply zone. You're going to see all these things, how to draw them and how to use them. Okay, I'm just trying to expose this kind of structure so that you know when you see the structure of the markets, for you to focus on a particular structure. You can trade. I have students who trade just ranging market. There are people who also trade trending market. So I'm a trend trader. So you can also become a trend trader, or you trade a ranging market. So this is ranging market. This is how it look like when you have the price ranging to the right hand side, okay, price going sideways instead of going up or down. All right, so the next market structure we are going to be looking at is the choppy market, okay, when the price is choppy. This is very important, guys. Most of you, the mistake you have been making is not that you don't know how to analyze your trade, okay. It's not that maybe you don't know maybe the trend when the price is trending, or where to enter or where to exit or stop loss, any other thing like that, talking about analysis. The problem you have is that you don't know the market structure before you jump into the trade. So a choppy market is no go area. It's not a market that you trade. A choppy market is a market you should avoid, okay. When the market is choppy, it simply means that this market is confusing. You don't really know where the price is going to. The price is not actually going up, it's not actually going down, it's not actually going sideways. The price is moving randomly, like you can't even say that this is the direction of price. When you open your chart, you open your boom 500 or boom 1000 or crash 500, crash 300, any of them that you open, and you discover that the trend is not up, it is not down, and the trend is not sideways, the price is just moving randomly, please avoid that market structure. Avoid trading that market structure, because it's going to make you lose a lot of money. Okay, it's going to make, because after your analysis they are going to water down your analysis. That's why when you finish analyzing a trade, you enter buy, and it's just maybe within 2 3 4 minutes it reverses and start going against you, and you'll be like, I've seen my trend line, I've put in my support, I have my confluence, anything like that, and the price is still going against you. You'll be wondering why. The problem is that you are trading the wrong market structure. Okay, a market structure that can do anything, that don't respect anything, they don't respect support, resistance, trend lines, indicators, they just move randomly. So when you see this, that's the time where the market is being manipulated. So you have to avoid trading anytime you see a choppy market, guys. So this is the end of this section, okay, where we'll be able to understand, I try to expose to you different market structure and the one you should not trade, which is the choppy market. We're able to cover the choppy market, we cover the ranging market, we have seen the trending market and the behavior, okay, why the price keep going up. There is certain behavior you should expect the price to do as it keep going up or down, seeing those swing highs, swing lows, okay. So you'll be able to cover the three basic market structure you should know. So we are going to be diving, the next one we are going to be seeing the nature of trend, okay. We are going to be focusing on the trending market, because the price trends about 70% of the time, okay, and ranges about 20 to 25% of the time, and the remaining 5 or 10 is a choppy market. So because we have 70% of the time the price trends, that means we are going to be focusing more on a trending market, because that's where the money is, okay. That's where you make a lot of money. So I'm not saying that you can't trade a ranging market. You can also trade, and I will also teach you how to do that. But I know for you to maximize your profit, you need to be targeting a good trend, okay, for you to ride in massive profit, guys. So I will see you guys in the next one. Enjoy.